Hello, this is Huskins, your Forex mentor. Welcome to the daily review of February 19th and the preview of February 20th, 2013. Your daily dose of events that shaped the Forex markets. Let's start off with the thought of the day. As I look back on my life, I realize that every time I thought I was being rejected from something good, I was actually being redirected to something better. I thank God for everything He's given me and the direction He sent me towards. Now let's look at the market snapshot, um, where the markets have been this entire year and last year, to find out where perhaps we might be headed towards. So uh, this year the best currency has been the New Zealand dollar. The New Zealand dollar has been the best currency this month. Last year, the New Zealand dollar has been the best currency throughout the year by a substantial amount. The next best would be the Great British Pound, but by a substantial amount, the New Zealand dollar uh, has overshined over the rest. And last week, the New Zealand dollar was strong. So all in all, we need to keep in mind that when we're trading the New Zealand dollar appears to be in a very strong position. Now let's talk about certain geopolitical events which took place. Now, U.S. government's latest sanctions on Iran. Now, the US government put a sanction on Turkey's bank, which used to facilitate the gas for gold trade with Iran. Now, for nearly a year, Turkey bought Iranian natural gas, and it bought it with Turkish lira, not with US dollars or euros, because you cannot use them in Iran. And then the Iranians, what they did is, in exchange of the lira, they bought gold at the Halak Bank in Turkey. And now this gold was actually shipped to Iran via Dubai. So now what the US government has done is they have kept a little speed breaker on this. Now the bank will can only accept payments for Turkish oil and gas purchases, and Iran is only allowed to buy food, medicine, and industrial products with that money. So they cannot buy gold anymore. So gold exports will definitely fall. Now, the Turkish economic minister appears to be conceding the point. According to the Reuters dispatch, he signaled a decline in trade last week when he said that while Turkey would not be swayed by US pressure to halt gold exports to Iran, Tehran demand for metal has been expected to fall. So he's trying to appear to be strong, but he's actually caving into US's pressure. Another article on gold is the gold tax in India. Now, so many people have imported and dumped gold. Um, Basically, there were rumors that after the first week of January, an import duty hike would be in play. Now, people waited for the duty to increase and earn more profits. Now, there were about 100 tons of gold were imported into India in January, which is up 40% from last year's average monthly imports. Now, worried about its gold growing current account deficit, India currently attacked gold imports by upping the duty rate by 50%, that is from 4% to 6%. Now, of course, this caused a scramble for gold before the increase took place on January 21st. India's next budget announcement is scheduled for February 28th, and if gold imports continue the way they are, traders are concerned New Delhi may take further action to curb demand. Now, the hike in duty will only lead to large-scale smuggling, and that's obvious. And this will lead to loss in revenue for the Indian government. Now, Abe pressurizes Bank of Japan to loosen its monetary policy. Now, the Japanese Prime Minister is adding pressure on the Bank of Japan to back his call for an aggressive monetary easing to drive up inflation and stimulate growth. The government is thinking of rewriting the law that guarantees that the central bank is independent from the government if the country, that is Japan, does not reach a 2% inflation target. Now, what does this mean? This means that if Abe has his way, we'd have a lot of downward pressure in Japanese yen. A European's transaction tax could actually backfire. Now, the European nations are moving forward with a proposed tax on financial transactions, which includes stocks, bonds, and derivatives, which are futures. And but how history has shown us that attempts to tax these transactions have forced the activity to different jurisdictions. Now, I'm going to give you names of different jurisdictions, such as Singapore, such as Dubai. And so basically, these transactional taxes, they do not meet revenue or expected revenue because the government seems to believe that the transaction amounts will remain the same, but that seems not to be the case. And I believe that they stem from a desire to punish the markets, punish, oh, all right, we had this big giant meltdown, the markets are to blame, so let's punish them and let's tax that. But the markets can always vote with their feet. That means that they can take their money to places where they'll be taxed less. Now, a few notes and observations. Looking at this one here, the RBA Feb meeting minutes were upbeat on regional recovery. It sees policy has already very accommodative, and policy is already, uh, you know, uh, the activity has already is responding to low levels of rates. Now, these hawkish comments sent the Aussie US dollar over 1.0430, and it went also up against the New Zealand dollar for the third consecutive day. Need to bear in mind that the New Zealand dollar is the strongest currency for the year so far, but over the last 3 days, the Australian dollar is gaining ground on the New Zealand dollar. The Aussie CAD is also at a 2 week high. Now, New Zealand financial minister uh, talked down the New Zealand days after it hit the 1.5-year high, which was 0.85 level. Now, actually, after the finance minister talked down the New Zealand dollar, the New Zealand US dollar fell nearly 50 pips to about 0.8400 level. And he basically mentioned that that the high New Zealand dollar is a headwind for exporters, but at the same time, he also acknowledged that the imports are made very cheap. Now, this echoed the comments made by the Prime Minister yesterday, highlighting the benefits of a strong currency, in this case, a strong New Zealand dollar, as it helps consumers and keeps inflation levels low. Now, I'd like to talk to you about the European zoo sentiment. We've already updated the uh, trade plan page. Let me have a look at that really quick. So you should be get access to this page from your members only section. Here you are. Let me. So you'd see an update out here. You'd see German zoo observation and trade hunch. You click on that, and then you'd come to this page. Now, a few quick observations. Now, before this news, this is pre-news observation. Before the news, we had 38 estimates on this particular news event on the German zoo, and the mean and the median estimates were 35. Now keep in mind the highest estimate was 46.5. That was one estimate, and then 42. That was the second highest estimate. Now look at what the markets, what actually happened. The German zoo survey economic sentiment was at 48.2 versus 35.0 expected. And not only that, it was higher than the highest estimate. The highest estimate was 46.5, while as the German zoo came out to be at 48.2. Now, this would, in normal circumstances, mean that the euro should bid up much higher. But let's see what ended up happening. What ended up happening was that the euro, this is against the US dollar, and this is against the GBP. So the euro went up as expected by the news, but this news was not sustained, and it almost immediately went down after that. So a trade idea which comes to our mind is that perhaps good news from the zoo is already priced into the market. So from next time onwards, I might be looking at selling a knee-jerk reaction to the upside. Next month, I'll be observing it, and in case we get a similar trade, I might be trading the 1 minute or the 5 minute reversal on that. So just stay tuned to that particular trade plan. But so far, we are on an observe-only mode, and I have written the conclusions out here. The conclusion is that the market is not focused on economic growth from Germany. The geopolitical chatter is currently more important than the actual results on the ground. Having said that, we had some little trouble from Italy, which was reported. As the session progressed, the Italian 10-year government yield reversed its climb and was around 4.40 from 4.45. So that was during the European equity market open. Now let's look at the preview of what to expect tomorrow. This is the calendar from Forex Peace Army, and basically there isn't anything much which is market shattering till the FOMC meeting minutes. Now the FOMC meeting minutes is important, but we do not have a trade plan for that. So I might want to be out of my positions by 150 or 130-ish, 140, definitely before 2 o'clock. So I'm going to be out of the market before that. And now look at the claimant counts change. Now we definitely have a trade plan on that. So let us click on the trade plan. As a member, you would get access to these trade plans. To get access to these trade plans, you need to click on this particular link here. Now, I'm not going to go into detail on what this trade plan is because I asked Rick to record a video and he's done a very good job of it. The information is mentioned out here. The UK claimant count change measures the change in the number of people claiming unemployment related benefits during the previous month. So a high number is bad and a low number is good, because we don't want more people to be claiming unemployment benefits. But what I will be doing is I will be trading the 5-minute 21 SMA reversal. This is not the news candle reversal. I'll be trading the 5-minute 21 SMA reversal. I'd want to show you how I would have gone about trading that today had today been the news. All right, today was not the news, but had there been news today, this is how I would have gone about trading it. On at 4:30, we have this line out here denotes 4:30, and this line out here denotes the 21 SMA. At 4:30, 5 minutes afterwards, we had price above the 21 SMA, and here, once we get a crossover of that particular price, I'm looking to sell the GBP USD. Had we taken out this trade today, it would have made some profit. Now, this trade has been pretty consistent whenever we have the UK claimant count change. Basically, what I'm trading is the mid European market reversal. These are a few setups which I've seen quite often, and they tend to occur periodically. And when we have news causing the market to move into one direction, these kind of trade setups have so much more juice into it, and we have history on our side. So that's it about the UK claimant count change, and that's the end of the presentation for today. Hope you enjoyed it. You can always email me anytime you feel like. In case you don't understand, you want me to improve the site, you want me to improve the service to you, just let me know and I'm here to help you. Thank you. Signing off. Adios. Bye bye.